Were you denied for a debt consolidation loan? If so, then you need to know about these two alternatives. Option one is a debt management plan, which is typically done through a nonprofit consumer credit counseling agency. And the second option is debt settlement. Debt settlement is a lot more popular. Think national debt relief. So the first difference we'll look at is which service lowers the overall debt amount. So with a debt management plan, it's not going to reduce the debt itself, but it will reduce your interest rates for the accounts that are being enrolled. And it's typically reduced down to anywhere between 0% to 11% interest. Debt settlement, on the other hand, will attempt to reduce your overall debt, which will typically be reduced down by 50%. Next is, does it reduce the monthly payments? This is a big one. A lot of people are looking for relief for their monthly payment. And this is why these options might even be better than a loan, even if you qualify. Because with a loan, your monthly payment might be the same or even increase. All right, let's get to it. So a debt management plan, yes, your monthly payment will generally decrease, and it will typically reduce the monthly payment by 20% to 50%. So if your monthly minimum payment comes out to $1,000 right now, then you can expect it to be anywhere between $800 to $500 for the new reduced payment. For debt settlement, your monthly payment gets reduced even more. You can expect it to be anywhere between 30% to 70% of what you're currently paying. So if your current minimums come out to $1,000, you can expect your new monthly minimum to be anywhere between $700 to $300. All of this depends on the type of accounts that you're enrolling and which creditors as well. Now let's move on to a big one, which is the impact on your credit. So if you're looking for the least amount of impact on your credit score, a debt management plan is great because it avoids getting you any new late payments, and it has a minor impact due to closed accounts. So may not even be impacted at all. Your credit score might even increase once the accounts close, depending on the accounts that are left open. Your credit will typically improve, of course, over time. With debt settlement, there is a significant impact to your credit. You will typically get late fees in the beginning to show hardship to the creditors. The credit usually starts to recover after 6 months, though. You do need to make sure you have at least one open and active account. I recommend having at least an open credit card, keeping the balance low, and paying it on time each month. Now let's talk about the time to get out of the debt. For a debt management plan, it's usually 3 to 7 years. And with debt settlement, it's going to be typically 2 to 5 years. As far as fees, a debt management plan typically has a small upfront fee, anywhere between $0 to $140, and then monthly fees typically anywhere between $25 to $75. For debt settlement, there is no upfront fee, and a debt settlement company cannot get paid until after a settlement is reached, the consumer agrees on the settlement, and a payment has been sent to the creditor. And then the debt settlement company will take 25% of that debt. And lastly, let's talk about, does it require to close accounts? Because a lot of people, they're like, oh, I don't want my credit cards to close. With a debt management program, yes, and they're very strict about which accounts you can exclude. With debt settlement, yes, the accounts will close and close on their own, which likely due to them defaulting. But the good thing is debt settlement is flexible on which accounts you can exclude. Now let's go over an example of someone that has $25,000 in credit card debt. Let's say their old monthly payment is $800. With a debt management plan, their monthly payment is going to be somewhere around $500. And with debt settlement, it'll be somewhere around $400. If they kept doing what they're currently doing by making just the minimum payment on that $25,000, it actually can take them well over 20 years to get out of the debt. But with a debt management plan, it'll be somewhere around 5 years, and with debt settlement, somewhere around 4 years. And as far as the total repayment amount, if they kept doing what they're currently doing, just making the minimum payments, they can easily pay over $50,000 just due to all of the interest. With a debt management plan, they can pay somewhere around $33,000 after the reduced interest plus the fees. And with a debt settlement plan, they can expect to pay somewhere around $18,000. That's after the settlement amount plus the fees to the debt settlement company. I hope this video was able to give you hope that, hey, you have solutions if you're even denied for a debt consolidation loan. You can still consolidate their debt, and there's great options. An option that, prevents you from taking some massive credit hit, and another option to just help you get out of debt as quickly as possible without filing bankruptcy. To learn more, make sure you give me a follow. And to get a free consultation from me, make sure you go to the link in my bio today.